Morning, guys. Good morning. Happy Monday. Like we're a little light this morning. Wait for a few of the guys to get on. Uh, Futures looking pretty even. Dirty Dow is up a little bit further. Uh, we were actually see if we can actually see it here. We were actually down quite a bit when we opened. Not really down quite a bit, but we were down and actually started to put the points back on. Thing to remember here is we're an all-time high, so we actually ticked through all-time high already on S&P, and so we're technically there right now. So 422.76 is all-time high. Uh, that's all you needed to know. That's basically all you need to know for today. You're if you're gonna open into all-time high, uh, the day after putting the points on to get into all-time high, a bid Friday, coming after a pullback on Thursday, which was completely pre-market oriented, and we went bid from there. You're going to continue going bid. People are willing to keep buying. Uh, the dynamic between taking profits and continuing, or taking profits because of this inflationary problem that we're going to have, in relation to this continued risk-on rally we're on, with the Fed continuing to push everything. Fiscal policy has continued to be bid. The decision has been to continue to push the risk, right? There hasn't been this stop and say, okay, you know what? We're going to need to take some of these profits now because we may not get the chance to later. The idea is instead that things are going to continue to be pushed because where is the end? Where is the time in which we would need to do so? To take the profit and go, okay, we're going to need to go into some sort of different type of time period here through a risk off inflation problem, possible recessionary problem. That's not happening. And so again, even today, before anything has started this week, and we've seen Mondays be the days in which the most orders are coming through because we're on a weekly sort of time focus now. We're not sort of waiting for things every single day, every week. For instance, this week we do have some different events. Thursday we get CPI numbers coming out for consumers, right? Uh, Looking at those inflation numbers, we're gonna put the orders on today for those things on Thursday, right? Uh, these ideas of inflation are not enough to stop the buying every Monday come each week, and so here we are, continuing all-time high this morning. Now, if you look at the orientation of it, it's still important. The Dow is up considerably more this morning. Now, let me put the there you go, pre-market line on. When we talk about all-time high, this is going to be back the Dow back to the all-time high. Now, this average is obviously silly. We joke about it, but it still shows that there is further demand on this side than the overall sort of market. Again, if we use the S&P as the overall market, right, the overall benchmark, then the Dow is a more value-oriented side of that. Even though Apple and Microsoft are in there, it doesn't amount for much more. What is it really? It's just energy and banks, right? And that's really again the area in which the most amount of demand has been put. The oil and energy side again is still significantly further ahead of the market. And so again, I updated from this weekend the XLE chart. We got another this we finally were able to get an update on this chart I talked about a little while ago. And so I posted this XLE chart. Uh, this is an important thing to continue to understand is that it's really easy to look at this. For instance, we reached 70. We reached $70 per barrel today, this morning, and it started to come back down. And it's really easy to go, okay, well, it doesn't really make sense for it to continue going up, right? When we think about everything happening, demand's going to go down. Uh, there's only so much supply that can really be cut to continue to rise prices. So what is how is it even possible uh, for it to continue to go up? Especially when I've talked about this idea that the economy can only reopen once. So what is really driving this price here, right? But the thing to remember here is that we're not trading in the market because of the economy reopening up anymore. We're not trading it because uh, we're we're trying to do this. There's another fool buying behind us, and as long as we're not the greater fool, we can just keep it. We'll just keep pushing it. We'll be fine. It's this inflation dynamic that affects prices in a very sort of strange way, right? We're talking about something that's going to be an impact in the future that has an impact now. Why does it have an impact now? Because we're speculating on it now, what's going to happen then, right? We're trying to price it in right now compared to just waiting, seeing the numbers, and then pricing it, right? Because that's not how we do things. Because you have to get into position, right? If you're going to be able to hit the ball, you're going to get into position to hit the ball. That's what we're doing. Is the price of oil right now really $70 a barrel? Is it for right now? Probably not. Probably right now, if we actually just did the numbers, it would not be even close to $70 a barrel. So what we're doing right now is, again, we're basically trying to set up portfolios that take into account what's going to happen, 2 years from now and 5 years from now. That includes a time, right, in which we know this is peaked, but it could be at that point at maximum inflation, maximum sort of economic growth. What's it going to take to build more infrastructure? Economies around the world rallying together, right? We have new areas around the world becoming economic sort of powers. These sort of things all add up to we're going to need a lot of fucking oil. And even though it's not good for the planet, we're going to need it. And the reality is that clean energy is not that close. We're having I think the real understanding from the market so far has been that we're really not that close to getting clean energy across the world, right? And it's kind of silly to use the stock market as a underlying understanding of what is to come in the future. But I mean, the reality is that we have not really been pricing in a quick turnaround in terms of clean energy. We were during sort of 2020 with meme stocks going off in the first start of it, and sort of this growth paradigm of this is literally the only thing we can buy. And it caused this sort of boom in the prices, but those prices no longer reflect the relationship between the timing in which those things will happen. Because right now we are pricing things for what's happening, right? Which is again this banks uh, in old energy sort of dynamic, and value being the go-to right now, right? And tech is sort of, again, tech is doing decent enough, but it's still not being priced for what it's usually being priced for, which is this future growth prospect, right? And that again has shifted portfolios and is shifting the way in which price is moving, and that's just where we're at, right? Where there's nothing else that can be done, and so we continue to ride with sort of the wave that's here, which is this: we need to orient for inflation. We need to understand the risk involved in the game we're playing, which is we're riding a risk sort of bubble induced by the Fed. We can't be caught off guard by the fact that everyone is doing the same thing, and we all need to realize the game theory involved, which is this is not sustainable without continued federal support. So there is a political nature here. So I've continued to talk about we're looking for really the politics and the timelines. We've got Yellen coming out talking about taxes again. How do you support this constant spending by not only the Fed induced liquidity in providing 120 billion a month, for instance, zero interest rate, and then the fiscal support from the federal government with big fiscal packages, stimulus whenever there's some sort of downturn. How do you pay for it? Well, taxes, right, are the only way. This sort of comes into, again, a problem of, well, there's only so many ways to do that. People don't want to pay more taxes, and you don't want to charge companies more. So how do we pay for it later? And so again, that tail end risk, it has to be solved. There's a growing consensus that we're going to be able to spend our way out of anything. That has not been shown to be true. We don't know that yet. And so it's really like this faith dynamic of we're going to be able to ride this risk through anything because we're fucking America, uh, which I believe we can. I believe there are tools out there that allow us to continue to push this because of the way the fiat currency works and the way that you can print money, and it's the timing again that's involved that actually allows you to continue to cover. It's not it's much better than a Ponzi scheme. It's you're always able to get the cash, and you're actually always able to spend. And the thing that we forget about is that the government, it doesn't need revenue to continue to spend money, right? Because of the fiat nature. And as long as there's just enough, right? And the rest of the world needs something from us, then it's fine. If it was just us, then obviously it doesn't work. The economics do not work if it's literally we're the only country in the world and we're the only ones spending money and making money. Well, then you'd have to be thinking about some sort of profit under a capitalism society, right? But it's the fact that we are involved in a global economy that you can actually keep spending, right? And so I'm under the belief that you can just keep fucking spending money and it's gonna be fine. The inflationary problem is not so much uh, of an issue in the future like we would think with, okay, we're gonna enter a recession when we need to pay for this. We've we've proven in the past that it's been the case that with the shift between Democrats and Republican governments that happens, right? That's a political issue. That's not an economic issue. That's the way the policy comes through. Are we really going to see that again? Donald Trump didn't even introduce some sort of policy that somehow stopped the government or somehow stopped the economy from booming, right? Yes, it came down because of COVID. That's again a political issue. That's not an economic issue. There's nothing that's stopping. It's not stopping a booming economy, right? There's no force coming from the government of less regulation that's going to cause some sort of overspending, over leverage. Yeah, our banks are we over leveraged in the financial system? We're fucking derivative out of our mind because again, what happened back in financial crisis, we had to stop playing around with a lot of a different leverage, right? You know all we did? You know we covered the tracks of using leverage. We made a bunch of new complex derivatives that you can't fucking see, that you don't understand, right? You know what they're doing in Europe? In Europe, they have the GAR, which is to stop, which is basically for environmental sort of concerns and having like an ESG fund, right? How good is your company for the environment? How good is your fund for the environment? Do you know how you get around those things? You just make new derivatives that don't get computed into those because the math doesn't work. And you can continue just to have risky assets, right? It's the way in which we continue to layer these things that allow for wealth creation, right? We just continue to do this. We don't really have that problem because of our size and because we have the Federal Reserve, right? It covers all of the problems. We cover every risk problem, right? And so the idea that again we're not going to see inflation coming, it's a it's induced by them. It's not from over leveraged banks this time. It's from the Fed. It's a huge difference compared to the housing prices, right? It's different from mortgages being defaulted on, right? Those are from a user generated sort of side of things. Right now, our issue is from literally the government itself. And if we're acting again, the problem would be that where inflation gets out of control, we put ourselves there. Do you not think we can't continue to do it, right? Did we really step into this dangerous place purposefully, right? To basically tank the economy. We would basically tank the entire world economy. Of course not. The Fed obviously has an idea. So there are those contrarians out there. You know, I read some opinion pieces in Bloomberg this morning about how we are in a big dangerous situation of how this time inflation is going to be a big problem. Do you know what they use for data? They're using the comparison between the US and UK and how the US spent so much more money during this crisis and how the unemployment rates were the exact same for both countries, right? The US spiked more, but they both came down to the basically the same unemployment rate now, but yet we spent trillions and trillions on more. So it's like, well, people in the UK got to go back to work and they didn't even spend as much money as the US did. So how is that even possible? Didn't we overspend, right? How are we going to compare a little island, right? that has no idea what they're doing, right? No offense to anybody, in the UK. They left the EU, right? They're doing some really silly things. Those are all political things. The economies are so different that to try to use the data between a country that has over 300 million people and a little island of people is insane. The numbers are not even close. And so there is no comparison. And so whenever you try to use data to compare two nations that are complete, America's 10 times the size. The economy is just not even close. We have an economy of scale because of the way we, again, have labor that's specialized. It's not close. And when then you compare the data within ourselves, we're barely spending any money. It's hard to remember that, yes, it's a fuck ton of money. Trillions of dollars is a lot of money, but we're barely spending any money of our actual GDP or anything. Even if you don't want to use GDP because the number sucks, if you just look at the actual money that's made in this country, in our production, yeah, we don't even build shit anymore. It's still, have you seen the fucking companies this country has? It doesn't even matter if you don't look at it through market cap. You know how much money Apple made? They sold more fucking, they had more revenue selling AirPods than basically every other company in the world. They made more money with AirPods than every company in the world. iPads more than every, these sort of things, right? It's enough. It's literally enough. That tax money is literally enough to pay for everything, and we don't even need it. And so again, there's these. It's it's hard to use any of the data that disproves sort of the boom, and there's the reason why we keep betting on it. And so using those mega caps, right? It's again important to realize that those, when we talk about sort of trading and investing in the leader, right? It's important to realize that those mega caps are going to continue to grow because of their position. And then there's nothing that we can really do to stop those from appreciating. And also, the side that's supposed to hurt them of inflation is exactly what's going to let them continue to grow. Without a growing economy, without growing sort of prices, and whether we use some sort of utility factor, like the growing utility in the world or something that allows, you could see obviously the lines going up, and however you want to measure utility, that's going to allow those mega caps to continue to grow. These things all sort of feedback loop back in themselves, because if those companies keep growing, our country's production keeps growing, those revenues keep growing, we can keep spending more. All we're really doing as a country is betting on ourselves over and over. And that bet is taking it's like mark to market fucking accounting. We're literally taking what we know is going to happen in the future. Yeah, it's a little risky to bet on these companies and to hope that they're going to be able to pay all of our costs in the future so that we can borrow it for right now, right? But that's literally what we're doing, is that we're saying everything is going to keep growing because if we put the money back in right now, we're going to grow faster, which can allow everything else to grow. That's self-induced inflation. We're literally doing it on purpose. It's like pulling the chain on the lawnmower. You want to cut the grass, you're gonna fucking pull the chain. It's silly to again talk about anything else, and I think it's just this weird dynamic that there's literally nothing else to talk about. It's boring. There is no problem with the world, and it feels weird because we were in this weird COVID situation. But again, the risk involved are completely different than I think the actual understanding of it is. The risk of COVID has come and gone. Obviously, there's still problems we need to fix, but the idea that again we somehow have basically put ourselves in a hole is pretty ridiculous, especially when you look at the amount of money. Right? We spend $1 trillion a year on military. When's the last time we've actually done anything? The last time we were in a war, we were in a war with again countries that are like the state of Delaware, right? I mean, I think we're gonna be all right. Anyways, we're at all-time high. What I'm trying to say is that there's a reason to be risk on. If you're not in position, you got to be in position, because if you're not in, you're not making money. And if you have cash on the outside, you're losing money. You have to be in all the time because you need to capture. It's again important to realize you need to capture over weeks of time. Every single day, pre-market opens up higher and you're not in, you're missing that gain. The gains usually don't come intraday, right? The easiest example of this is, again, you look at something like looking at the Dow and the energy companies, banks. It's really easy to be like, well, they just continue to trend one way. That's because you need to be in through the trend, not trying to time the trend, right? Yes, we try to take trades when they come out of a consolidation, a breakout. But if we're not within those, if we're not entering those positions at that point and sticking with them over a long period of time, then we're really not gaining anything, right? And that's why we've changed our focus to a little bit longer term. You have to be continuously entering these positions, taking money home so that you can continue to increase your cost basis, right? So we talk about transitioning. So things like banks, right? Banks have just continued to trend. They don't have as deep of a pullback as energy. Using those times of brief stops to take your profit, put it in the bank, take it home, but then increase your cost basis the next time you enter it, right? So that you're getting larger and larger profit every time. It's an important factor to this because, again, if you just kept it in there, you guys have all seen what happens when your options or when whatever it is you're trying to do reach that sort of 1-to-1. Your delta's 1, you have no exponential. You reach that point where you're like, okay, well, I'm going up 1-to-1 with the underlying, but it's not taking advantage of what's happening right now, right? And so if you look back in hindsight and you try to look for the perfect time, if, again, you're never going to time it perfectly, but if you do look, you can see the potential of just that 1 or 2 extra days of being in at a lower point, taking profit at a higher point, right? That exponential in there is significant. The reason being, again, that everyone is doing this, everyone's involved, and no one's exiting long positions. We're continuing to bet. You have to continuously outpace the market, right? And we all have the ability here, since we're smaller, we're not big funds with billions of dollars, that you can continuously get in and out at a pace that's faster, allowing you to continue to gain an exponential. Your risk is, again, that cost basis you're putting in. But as soon as it comes from that point of at the money and starts to move from there, right, you're gaining an exponential through there. Maybe 2% on the underlying, but you just got 50%, right, as an exponential if it continues, right? These things are important because there's barely any risk involved. When there's no risk of downside, you need to put everything you can into it. And that's, again, where things can be slow and look boring. And we look at the energy chart and it's like, well, okay, there's really nothing happening here. Then put more into it, do more, right? And again, when we then look at things like mega caps, we understand there are more risks. We're not moving as fast. And so this takes more effort, takes more focus. You're going to have to re-enter multiple times because you're not looking for what's happening now. You're looking for what's happening later, right? And you don't know when that's going to happen. That's a different trade, right? And so we understand that there's risks involved. So we're not going to go put, when we take these trades, we're not putting as much emphasis on it, right? We're trying to make it work. We're trying to trade it. The other positions are like being boomer investors, and that's a great sort of thing. And I talked about it with things like SPY-D here, the derivatives. This sort of thing is the easiest thing in the world when you look at it from like you look at it from like right now, looking back, you go, oh yeah, I mean, this is the easiest thing, and you haven't had to do anything. Well, so if that's the case right now, you don't need to go, well, maybe it won't be like that tomorrow. That's not how this works, though, right? If it got to where it is right now, it's because there's an idea that it's going to be over a longer term, right? It's not like like an Apple chart or growth chart that is trying to make its way through something right now, even though those are good charts, right? Those are good companies. These sort of things, you have to continuously take it every time there's a pullback, right? So if this week, again, we're an all-time high right now. If you're not in the market, then you're not capturing all-time highs. You're watching, you're looking at news. You're here. You're looking at prices go through all-time high. If you're not fully positioned, then you're not capturing that, right? Does all-time high mean anything? It does mean something because, again, you keep putting new highs on, which is new highs for your fucking account. And if you're not taking advantage of it, then when are you going to take advantage of it? When it's at a low and when the prices are going down, right? When we look back in history, I watch YouTube videos every now and then of when they go, oh, the Dow reaches new all time highs. You know how long they do that? When you're in a bubble, they do it for a long time. So even if you want to go, well, dot com bubble was pretty, much like this. You know how long they were saying that, oh, Dow reached all new time high, up 100 points today. They did that for fucking years. Years, right? You gotta be involved. So I know most people are, but whatever amount of risk you think you're putting in the market right now, fucking double it, right? Double it. There's a reason to continue to be hot. Look at what's going on with the retail sort of trades, right? Uh, the funneling of money into very sort of finite areas in the market that are not connected, just meme stocks is what we call them, right? That is a very small amount of money that's being able to push things. Now think about the entire world's investment community putting money into a market because there's nothing else to buy. And imagine that right now there's still trillions of dollars out there that has not entered the market, right? What do you think they're going to buy? They're going to come in, right? If you know you've got money coming in, there's only one thing you can do with your money, right? So we'll continue to watch. We'll continue to think about some, larger ideas. We do have some other things going on. We have like G7 meetings on Friday. I think we have Iran nuclear deal talks on Thursday as well with the CPI numbers. There's that the Apple thing coming again, but who cares about the Apple conference? Whatever. Doesn't affect price. We'll see if there's a new iPhone. Can't wait to spend more money. But also ECB's on Thursday, so Thursday gonna be a pretty heavy economic data sort of day. So should be interesting to see what happens to Thursday. Maybe Wednesday will be a little dry. We'll see if that's the case. But let's see what we get here. Probably some all-time high bid if I had to say so myself. Let's see. This on. AMC 52. The apes are strong today. And then again, the question about AMC, we saw that in all the meme stocks, we saw tightening all the way into Friday. About a 3% bid to ask spread, which is fucking low on those. So the question is it a breakout? Are they going to continue? It's looking like it. Looking like it. So you might have some, you may have some chances to keep trading those. Day trades only. That's you buy it in the open, sell it by close at some point, right? That's literally not a problem. That's actually probably great. If you have nothing better to do with, you can't find something else to do with your money, then I don't see anything wrong with doing it, as long as you're in and out. Yep, looks like they're catching quite a bit of bid. And we'll see. Again, we'll see what the overall sort of reaction is coming into this week with everything kind of pressed for Thursday with numbers. We have, like I've said, seen Monday be our sort of day, starting weekly orders. Basically, everything comes through Monday. You have an idea of what you want to do through the week. You put it all on right now. Usually around the 10 o'clock mark, right? We see all those orders come through. Let's keep in mind this idea of a flat sort of week through all-time high, and then understand of melt up lunches, sort of what's happening. So we're going to focus on intraday a little bit and see if we can sort of understand timing. Because again, when you have a lot of things coming up, sometimes you do get sort of a subdued sort of situation, and then not sort of forgetting about some of this here, right? There is a level of volatility here that we don't understand and is not computed in the VIX. I was actually going to post a SVXY chart and show that VIX is probably going to break down, but that's probably a little too early to do right now because we still have not got out of the meme stock thing right now, so it's unclear. I've talked about it. This is January when they all spiked last time. VIX was up 62% in one day in like a couple hours. We have not seen any volatility around this rally, so this is still we need to wait for this before we understand really the repercussions, because we have June monthlies coming up, which again, June monthlies is going to be I mean, if you think you've seen something now, wait until those all come to expiration and they fall off, right? So Uh, that'll be a lot of interesting conversations, I'm sure. Pretty flat day to start. If we look, Nasdaq, same thing, coming underneath resistance. The Dow still holding basically its game, but not moving. XLE, again, I talked about crude, uh, oil hit 70. Looks like we're heading back up there. So that looks like it's going to continue to go bid. Banks are in the same thing. Again, the thing to watch here are we're still looking for more buybacks. This dynamic needs to be remembered across the entire market. Keep watching for things like mega caps to influence price, especially when there's momentum being gained. And we're looking for Apple and Amazon to come out of this low. This here, these are the two slowest. When we look at Google, Microsoft, Facebook, they're bullish as hell, right? Bullish as hell. This is just, I mean, Microsoft, I think, probably is going to break out of this here. So again, when we look at mega caps, they're still the must buys, easily must buys all the time, and they're very much like our other trades of pullback must buys, right? Tesla, we saw have a good day on Friday. Ooh, this is, again, I had no idea what's happening here, so I'm just leaving it alone. If you have some sort of idea of what's going to happen there, then you can bet on it, but I don't think it's about whether Tesla is going to be good in the future. I think it's about can they compete right now. We've seen things like Ford just absolutely fucking crush it. What is the dynamic here of EVs? I have no idea, right? We don't really understand it on a big idea level, so we do see that this right now is reacting technically. This, again, transitions however you need to do it. This is a nice spot for it again, right? You have the rejection on your trend line. You don't see it coming bid off the start. Take it. Look to re-enter it, right? These sort of things are again important. But that chart is certainly a lot more bullish. Let's see. Okay, let's get into some other ideas. Where's our X chart? Okay. X. These sort of things, again, things that are tied to commodities, back on, looking for continued plays through commodities. Gold, we didn't mention. Bitcoin is basically steady right now. Gold continuing its move. It looks like this looks very much like our pullbacks that we saw on banks and energy. Right, this trend into a very small pullback 2 candle looks like it's continuing. So this has continued institutional buying. When we look at Bitcoin, thing to remember here is that we're consolidating, and it's most likely more of a bearish sort of consolidation. Now, the thing here is, though, that it's reaching the apex here, which means nothing's really going to happen. So if you broke down or broke out earlier, okay, a move's coming. Here, it's just consolidating into its apex. So there's really nothing happening here, and so this is to be seen, to be continued. Right? So we don't really know what's happening in there. I mean, the best case scenario for the bulls out there is that it's holding support. So it's holding in here. There's not more selling. It's, again, a question of which would you rather be in. It doesn't matter if you believe in Bitcoin. It's what can I make more money with right now? Equities, right? Equities. So, that's the reality. What can you do? Okay. Break even. Completely break even. Someone says QAnon news with Elon. That would probably make it break down, right? All right, what are we at? We're at 14% on AMC. Keep going, apes. Probably the start to a news week for Apple here with the conference. Does look a little different. Little different than the rest of the megas. You can take a look. Little different. The other ones are green going the other way, and Apple's going the other way, so keep that in mind. I talked about a little bit come Friday of things like Netflix and some of these other tech companies that have been pretty much knocked down. Looking for these growth companies of a little bit larger scale compared to some of the other growth companies to show us some bid, right? We talked about things like eBay, for instance, that has been very bullish, right? Looking for these larger tech names to follow mega caps to the upside. Again, those three I've talked about. We're looking for this sort of thing to show us that growth actually is catching bid. Again, big names, the COVID winners, for instance, like Etsy, Zoom. Looking for these to come out of here to show us anything. I'm not saying they are going to, but we're watching them to see if that's happening because we want to understand again the demand here. We haven't really seen anything on this side, so again, until we do, we continue 90% value. Uh, the rest is basically mega caps. So uh, it's again important that we don't get going too heavy on these until we see it across the board. Doesn't matter if one does it. That doesn't help us with gauging bullishness if only a ticker's by itself, right? And so we are looking for all those big tech companies to basically get going before we really take a hard look at it and go, okay, maybe there's more here that we can pick up. Till then, I'd prefer the meme stocks over most of the other tech stocks. So. BLMN coming off 28. Looks like that's going to trade through this range for something to travel has a nice open so far. So again, our casual pullbacks. Um, this sector again is still very value oriented, just trending up, looking pretty good. The other thing I was talking about, okay, yeah, let's do this discussion now, is this healthcare side. So again, we've sort of traded flat for a little while on some of the big healthcare, making room for some of the big pharmaceutical uh, companies, specifically those involved with COVID. I've talked about this quite a bit. So if we look at again the Moderna chart, I think is a really good one to continue to look at. This is again going to be more of a opinionated sort of uh, idea based on everyone's own opinion, right? And it's that why are big pharmaceutical and bios pricing past COVID, right? So Moderna, for instance, why is it it's going past its all time and continuing to trend up? It's not because of COVID, because they've already done all the vaccines. They've gotten contracts. They've already made the money. They're shipping, right? There is literally no more here. So why are they getting priced further and further? This is being priced significant. This is deep pricing, right? So something's being priced here. Okay, what are investors pricing? Well, my opinion would be that you're pricing again a government sort of system in which money is going to be funneled to these companies to continue R&D for future sort of health crises, or at least to continue to invent new medicines, invent new sort of systems, and put it in place, and possibly even create a new sort of office for health sort of related issues. We've seen Fauci become a big sort of thing. We've seen sort of a task force. It's pretty close to being a sort of not so much cabinet sort of thing, but it definitely is more than the sort of system we already have. And we saw even before COVID happened, for instance, Trump took funds away from the previous sort of pandemic sort of insurance sort of system. Obviously, if they were willing to take money out of that uh, before a crisis even happened, then there's probably needs to be more of it. And so, what is sort of the driving force behind it? It's most likely government funded sort of programs. Now, the reason I think that's the most likely case is that we already know that universal healthcare is going to happen, right? We know that the system's already basically set up through Obamacare, and now what Biden's done. We're literally just one. I don't even think it's a president. I think we're like one Congress away from getting it. It's just the implementation. It should not be hard for us to do it. All the other major sort of countries that have done it. For instance, the easiest one, looking at South Korea, they turned it over from private healthcare into public in 4 years, right? And that was basically overnight that you could get free healthcare. It was basically 4 years of changing books, is the way I've read it. And so it's not a problem of implementation, it's a problem of time, and then of getting people to understand that you're going to be paying the exact same way, except you're going to pay less, right? And the money is all being pulled together for everybody. So you got to understand that your healthcare now is the exact same way, right? It's, I think, again, a political problem, but it makes more sense. If you look at that and you convert this thing over, again, it doesn't matter what anyone's beliefs are about it, but if you convert this over into a public healthcare system, then it does create this dynamic with these pharmaceutical companies. You're basically, you're going to need to, you're going to have to solve that problem again of expensive medicine and these pharmaceutical companies that basically overcharge. Well, you know what's a really easy way to fix the price problem is to fix the price problem. They're going to make less money, and then you fucking pay them. And what do they spend all their money on? R&D. Wouldn't you like to get a nice fat government check to go spend money and to invent new things that you're going to make money on later? Yeah, that's literally what the government does. And so it's really not that hard to see how these things all become one thing. Why is Anthem and United Health continuing to trend up, right? And I told you guys this last year that I think this is the sort of the number two sector in the equity market behind tech, and that it's going to appreciate. And we've, again, if you look at this chart coming out of COVID, it's really hard to ignore. It's really hard to ignore. Why is this happening? If everyone knows we're going to a universal healthcare system, it's going to be free, then why the fuck is this stuff going up so much, right? Because the money is still there. And you know what's better than just a bunch of poor people's money? Fucking big old Uncle Sam's money, right? Yeah, that money may come from poor people, but they can pay a lot more money and make a nice little sweet cherry on it. Right? And so, again, it's important to realize that this is, it's being priced in the market, and seeing it in the pharmaceuticals with the bios, even those that spawned from COVID. Again, you can have a different opinion, but you can't ignore the prices are going up, and something needs to be answered. So these, again, I think the question beyond that is just the time. Why are they going bid now? Why is this happening here? Is this timing right now, right? We know it's being priced for a future idea, but why is it being priced right now? Why not wait a year, right? Why not wait for something, right? So is this a question of who knows, or is it a question of people have a very strong belief that is going to happen? I don't know. And the investment community has decided they want to buy it all, so the more people buy it, then the more people think it's happening, and maybe the quicker things happen in government to make it happen, right? You ever heard that, where Wall Street goes, "Oh, we'd really like a blue wave to happen because we put a lot of bets on it." You know what happened after Wall Street put a bunch of blue wave bets on it? They gave a lot of money to Democrats in their campaigns. And so it's not that hard to think that, okay, well, we're all pricing for universal healthcare here, a public system. Uncle Sam giving the money over to these companies in a nice, happy transition, right? We'd like to see that happen because we're betting on it. So we'll see if those things start to creep up. We have not heard anything. It's important to realize that we have not heard anything. So again, it's being sort of it's a shot in the dark by the market, other than obviously sentiment that, okay, eventually it's going to happen. But Hector says, yeah, until our healthcare system switches to global budgeting, then healthcare operates the same way under the hood. Medicare itself is mostly private contracts. Yes, I agree. And that's also one of the funniest things to think that we somehow operate under our own sort of thing. It's like comparing drug prices across the world. It's like, how do we even get here? How did this actually happen? What are we doing? Where most of the companies we're not even paying ourselves. A lot of them are like Italian drug makers and shit like that. I mean, why does this shit cost so much? Am I paying for the, when you pay my favorite meme of it is the ambulance where it's like $18,000 for an ambulance ride. Am I paying for the ambulance to sit outside my apartment idle for fucking hours before it goes? Like, is that what we're paying for? Where are the things being paid for? Just sitting there. I can see one right now. Are we paying for it before it picks us up? I'm gonna take an Uber. It literally would be faster for me to take an Uber. I gotta call 911. I gotta come here. I gotta go downstairs anyway. By the time I get there, the Uber will be here. Fucking gonna get there just quick. Now, they're already public, so I guess that's not a good example. All right, small caps going bid, regional banks, small oil coming through. Let's see. Let's see what happens when this gets through here. We're coming in 10 o'clock. 10 minutes to 10 o'clock. I think it is important that we watch for that time. Uh, Again, on Mondays here, we've seen basically, however you want to call this price, but it's definitely that digestion period going to 10 o'clock or so. It doesn't need to specifically be 10 o'clock, but certainly we've seen this digestion period leading into the actual orders, or at least uh, a null period where nothing really happens on Mondays here going into it. And so let's understand and see if these orders start to come through now. And we want to watch the timing and how long some of these happen. Specifically, again, on those, however we want to look at it, these big idea sort of focus things. I think this week, a really big one to look at is aerospace and defense again. We have the Iran, again, nuclear deal talks on come Thursday in Vienna. I think this week you'll probably get speculators coming out on aerospace and defense. Look at things like, again, LMT with Lockheed, shit like that. People love to bet on that. You get fucking, there's junior bankers right now pitching to their boss like, well, what do you think about the Iran nuclear talks? Maybe this will fuel a discussion of some war, like this type of shit, right? Even if it's not like that, but understand that again, uh, there are things involved here. There's that global impact that affects us on a very micro level. And again, government spending is literally the dependent variable on all this. So what does it take to get the government to spend money on your sector? That's literally the only question that needs to be asked. Those usually stem from big ideas though, right? So looking for that. All right, Ecto's giving us a lesson on some ambulance some ambulance care. Two different categories in ambulance care. Mileage and supply reimbursement costs a lot for most people because most ambulance companies aren't contracted with major insurers, so they bill you full amount. That makes a lot of sense, yeah. Okay, that does make sense. So it's not Mount Sinai that's actually paying me or paying for my ambulance through healthcare or insurance. It's that fucking, I got the Israeli ambulance downstairs. And they need to, listen, Israel needs me to pay the full amount so that they can keep fucking shooting missiles at, Hamas. So, I mean, it makes sense. And they got to keep paying those, the hot chicks that they have in the military to keep making TikToks so that everyone wants to join the military and also shoot missiles at Hamas. I'll tell you what, I'm not going to Mount Sinai anymore. I'm going to, I don't know. I don't know what hospital I want now. All right, the apes are still strong. That's very nice bid. So again, we're looking to, again, I don't think the percents matter here. I think it's again about this. If we look at this as a consolidation and tightening, if this breaks out this way, then you've got a continuation. It's literally a continuation. You get some sort of, it's a little short, but you've got tightening. If it's a breakout, then you get this whole thing here. You can, however you draw this, it's a lot of points. That's That's the reality. That's a lot of points. Even if okay, let's get a little bit more in here. Okay. Oh well, okay. Hold on. Let's give it a little bit like this. All right. If we use this to answer the question, right? And it's going to continue that way after what we're calling this. Oof. Double up again. Just double it again. Just double it again. Go ahead, apes. Double it. I don't see any reason why that would matter. Like double easily. If it broke out, then this is again where the percent doesn't matter. We're only still talking. This is 27 billion. We're not actually talking about very much. There's not many shares out there. It honestly wouldn't. I mean, with the derivatives involved, that's the biggest thing, and it's coming into June monthlies. The way the gamma would work is really on its side to be able to have a breakout. Now, obviously, the more points it puts on, the fucking more that's gonna fall. But who cares about the other side? We only care about the ride up, not the ride down. It's very, very cute looking. Moderna does keep going, by the way, so I wonder why. STC, we're seeing a little bit, not much. DocU, I think this is an interesting one. Now, we talked about we're looking for the other tech companies to do things, right? Okay, well, here's the big one. Here's the big one, continuing moves. I think not taking profit after a 20% day on Friday is pretty damn bullish. So this is back in its range. Looks like it wants to put some points on. So when you look at where this is coming through, I mean, it's pretty heavy in here, but it's hard to deny. Hard to deny that move there. And we saw a lot of tech companies do this where everything looked like it was going to be bullish breakouts and then just came down, right? We started really getting heavy on value. So that's a start right there. Definitely a start one. Oops. Just give me one sec. Ready. Okay, here you go. There's your nice long, low shadow. Oh, the 5-minute candles are disgusting, but we're going to look at them. A lot of green. Definitely a lot of green. Uh, we're heavier. We're definitely heavier on the buy side comparatively. So even though we're a little bit break even across the market, a lot of these are right now catching a lot of bid. Let's see what happens here coming into this pretty sharp time. Triple B wise now at 34. So we are seeing across the market all the meme stocks coming together. So again, the important concept of what's happening with retail is that they're all catching bid. It's not just one that can be sustained because that's overall buying. It's not specifically one stock, right? If it's just one, then okay, well that's not gonna it's not gonna cut it. But still seeing it across the board, so pretty impressed. Pretty impressed. Trying to form a thought on this. If you are bullish on Bitcoin, right? Like you're a true believer, then right now is probably your time to buy. Obviously, like I've said, I'm not buying. I'm literally not buying. But if you are a true believer, then and you exited, then right now is probably your time because it's either gonna, like I said, if you're a true believer, then okay, it's gonna break out right here. This is its low and it's gonna go to the upside. I don't know what's gonna happen, so I'd wait. But this is probably your moment right there. I don't know if that's what do these things look like. These haven't broken out yet either, but same thing with like Ethereum. It's the same thing. It's just that looks fucking scary to me. That just looks like I mean, this looks bad. So but it could definitely it's calling for volatility, so it's just whatever way you think it's gonna go. So that's truly a bet right there. That's truly a fucking bet. If there was options, I would trade it in a heartbeat because I would again you could actually take a good position there, and it would be worth the risk. But since it's just fucking underlying, there's a lot you're risking. Right. All right. We're seeing some ticks of volatility come through. Let's see. Definitely see some heavier orders flow. And the other thing to continue to remember is this looming threat of institutions game theorying the entire retail trade again. So that may or may not be happening. Important to remember that that's out there. Spot VIX has not moved. Not moving. Again, ignore the opening session, but not moving yet. I mean, technically it is, but that's delayed, but that's okay. We keep seeing lithium put points on. Obviously, I added another chart from this weekend. If we look overall, things are looking pretty good. PLL is what I added. Nice weekly. Obviously, again, things on the commodity side are a lot hotter. They completely rise with inflation. Nice area to get involved. Lithium, steel, copper, lumber. We even talked about uranium a little bit. Right? These are, I think, catnip. Good old Gabe posted a nice meme of whoever the Cambridge House guys are. I've heard of them, but okay, obviously I know who they are. But they want uranium to double. It's literally just commodities are doubling every month, right? So whether this is actually a big idea sort of focus. If you remember, I talked about, I think 2 weeks ago, I talked about how I think nuclear is actually the go-to and why I don't understand why there's so much flack about nuclear when we do it really fucking well and it makes sense for getting the output we need from clean energy. But you can tie some of that big idea of, okay, nuclear is great, so uranium prices go up. That's not how it's not how it would technically work. So I wouldn't I would just say, well, that's what people are speculating and buying it for that. That's not how it would work for our government to set up new nuclear plants. The cost of uranium or something is not a barrier, right? They don't care. They've got it. So, this would be more of a global sort of trade, I guess. But the real answer here is that commodities are fucking going up. So yes, uranium. It's not a meme. It's important to, again, not turn things into a meme when they're not a meme. People are turning it into a meme. It's not one. That's literally not what's happening. Like saying lumber's a meme because it's gone up so much. Is wood a meme? Like I don't know. It's definitely not. So yeah. Either way, we'll we'll continue to look at things like in the obviously technical understanding of flows and everything else sort of way, not in any other meme sense. Rides continuing a nice little consolidation there. Let's again keep focus on those charts that we've sort of called for. Docu has broken through this next level, so this is that's a lot. That's definitely a lot. I mean, like it's gonna double. It's gonna double that for sure. Too much bid. Fucking some of these bio charts again. Do not. I talked about this last week. Do not sleep on some of those bio charts. If you want risk, the bios are always a play. Retail stores look continue to looks like they're going to continue their trends at least. Doesn't look like it's specifically bid, but Tiva obviously. Um, anything cute looking? My hearts continue. A lot of these are just continuing. Nothing from lows that I'm liking too much. Retail stores again. Some of these on lows are again it's a question of what you think is going to happen with CPIs on Thursday. It's pretty easy to answer that question. So, what do you think? Did the prices go up? Probably, probably, probably. Is that good or bad though? Is the question. The numbers could go up, but is that good for the equity market? My view is again that inflation continues to appreciate the entire sector. Right? Fucking Jesus. I mean, it's hard to go through things when everything is just looks bullish. Right? Ruby's continuing to come off this low here again. Another weekly chart. Weekly again. It's you don't have to believe that things are gonna be like this ridiculous, but I mean, I don't know. Whatever you want to believe in. I know it's not easy to look at those charts, but it is important to think that far out. I don't think I have an answer on the casino thing, but ERI is fucking bullish out of its mind. What's win at right now? Still dropping. We're gonna wait for this trade, but I think I'm gonna want to catch this on the fall at some point because we do. Obviously, we talked about it last week. Sort of the fall casinos coming down. It's most likely a trade. It's a trade. Whoever bid this here is probably the same selling, and you're still in the same range, right? This is. I actually might buy this right now. I'm a little ballsy this morning. Probably gonna buy this right. Let's see. I think I'm gonna buy that right now. I have some risk I can put on. I don't believe in that move to the downside right now, and I think it's specifically somebody exiting and not market. The best time to enter was yesterday. and I'm not waiting for opening buys. This, I think this shows you enough. Look at the bid on AAL and the tightening right there. Easy, easy upside right there. Right. CCL looking very bullish. I think your travel sector is going breakout again. It's not even a breakout; it's just continuing to trend up. But I think you're continuing all this move here, and the again the points here on travel are disgusting as well. So there's so many points to pick up. The risk is so worth it across the board. So when you talk about something like win here, it's just too easy. It's too easy to buy that. Like I'm gonna walk away with an extra arm here with a bag. Hot stocks are catching bid. I mean, this has not really moved with the whole retail trade. So see ACB climbing. I mean, obviously ACB has, but that's because this was being turned into a penny stock again. So okay, let's go take a look at some other things. Semis are tight. AMD's tight. Nvidia continuing its all-time sort of non-stop move. Again, the most bullish out of all of them. This is again needs to be separated when we talk about some of these that have just continued to trend. This is separated. It's the most bullish. We say it every time we bring up semis. Got to continue with these positions, right? I try not to clump them. Obviously, I say got to be buying mega caps, and then we're looking for other growth things. This is an individual ticker that's in a bullish sector because of an idea. They're not all tradable though, right? TSM, the big boy of the bunch in terms of supply, tightening just like the rest of them. UMC, oops. UMC has again still been the other most bullish, very much like TSM, heavy supply. The the price here is very similar to what we see the rest. Tightening. This has taken a little bit of profit from its more bullish move overall. We're not learning anything new here. So we just continue with the same play that okay, Nvidia works, but the rest really don't. But we are looking for answers still there. Okay, SFIX is going, so we are seeing retail stores across the board going betting on Thursday. So far it looks. IGT coming up to the trend line just like EVRI is. So anything related to it has the word fucking casino has continued to be this move here, right? Which is why when we talk about I use this idea of service providers or intermediaries, if those are making a move, which these have been for months, IGT, EVRI, we saw casino holdings continue to go, and we saw casinos moving a little bit, then it should lead some sort of move on that side. Travel's already bullish in the fact that it's coming from below. There's plenty of points potential. I have to imagine, right, that there's some points here. Now, again, some of these are different fucking things. They're apps, and you have things like DraftKings and all these different things that they're not completely related, but that's not the point. It's the fact that they're all about consumers and spending money that is disposable income. Maybe sometimes not, but it's betting on the people themselves. They're going to be active. Where's Ford at right here? Still holding down to percent. Perfect. Small caps basically leading the day so far. In terms of this side of things, and we've talked about further consolidation in whatever we want to call this sector. It's a mixture of communications, mixture of cable, satellite, uh, this basically big multimedia sort of focus with things really taking off with AT&T and Discovery merging their media, MGM being bought by Amazon. We have things like Viacom that looks like it's looking like there's something happening there. We talk about Roku having some sort of bullishness within this sector. We have things like Com making different moves, right? There's a lot of different things happening. Whether this is some sort of 5G orientation, whether it's some sort of take on Netflix, Disney Plus sort of thing, these things are all very similar in the way in which they operate. It's basically, if you're going to survive in this, you need to be bigger. Where do we see this before? Things like energy, oil. How do oil companies survive? Well, when there's one that's getting too big, the rest will merge. These sort of things like protecting sort of capital and protecting costs through, again, merging. If it works for the sector to merge and it increases revenue and the fact that, again, you're adding them together, but then the costs go down, it makes sense to merge. So you're somehow, if you have an asset as a company, which these companies basically have assets through, whether it's media, right? They have media rights, or if it's one of these ones that have sort of, again, they have, let's say it's a cable provider that has actual networks in cities and things, right? And you merge those, sort of like what we would see with airlines, which again is maybe another question of how do airlines operate in this when it makes sense for some of them to merge. I don't know. But it didn't happen during COVID. It's probably not going to happen now. But we're seeing it at least in that space with communications and the like. So there's definitely more to be seen there from at least the market's view. Okay, we're still taking some profit. So rejected at the all-time high, even though we actually put all-time high numbers on in pre-market. And when I say rejection, we're down 20 basis points from the all-time high. 20. 20 basis points on the down. This is basically just energy. Banks. So the point always being higher lows. You have a higher low? Okay, that's all you gotta know. Uh, Also, we have a ton of bids still across most tickers we're looking at, so we're definitely starting to hot on a lot of things this week. You can pinpoint some. Nothing to see there. Laser is continuing. See if this is the stop for Apple right there. Jesus, these charts are all over the place. Moderna's now 221. Holy. AMC 54 and a half. Subdued. Oh yeah, we're at almost 1020. We are continuing. We actually have pretty good orders still coming through. So, um, this is just it's not enough points to be like, oh, we're gonna whip. We have plenty of room to come down into support as well, if that were to be the case. That would only be about 0.5% on the day, which is not much compared to the 1% we put on Friday. That would be half. That's a lot less unlikely than this. Upside is upside is obviously through everything we've talked about, much more likely. Hold on, let me see. Let's put this on with this. So we were hanging out on Trendline this morning. Okay. Trading View, hello. Tell me where the actual trend line is so I understand or no? You're making this up now? We're making it up as we go. Okay. Thank you. That makes a lot more sense. That makes a lot more sense. Fucking bugged out. Okay. There you go. That makes a lot more. Yeah. Those are all touches through there. Perfect. What is that? That's 422.78. Okay. Obviously, it doesn't line up on the daily here. That's not what I'm looking at. I'm just looking at for the actual trend line through. PRE is back in. How are we doing on chemicals overall? Probably looking for a new breakout. Where are the trend lines in here? Okay. Maybe give that a little bit. Hard to. As this chemicals sector or whatever. I mean, not whatever, but chemicals, but it's mostly industrial is the idea. Probably ready to break back out of there. We don't really have other good examples between those two, GPRE and Dow. Retail stores are picked up all the way across the board. So urban, SFIX that we just sort of threw on. Again, these are bets being put on for Thursday's CPI. CPIs could be up or down in terms of pricing, and then it's a question of, well, is that actually good or not? It doesn't mean they're going to make more money. Right now, the market thinks it's good, which again is contrary to the idea that inflation's bad. So, unless they're betting that the numbers are going to be less, that still doesn't make sense. So, at the end of the day, it doesn't matter. People are expecting retail stores to continue to put points on. But all right, when are we gonna tackle this question? By the way, the Neo. I mean, what are we even gonna? I think we just convert this to Chinese company. Can we just call it a? Let's just call it Chinese company. That's it. I don't know if we can really talk about EVs as a whole anymore. They're all different. I don't know. These are just none of them are similar. It's actually, yeah, I mean, what do we there's just no way to talk about them all. They're just all different. Neo is fucking phenomenal. Looks like Ford. I don't know. I don't know how to answer this question here of is it we've saw the numbers. I mean, they're taking at least some market from Tesla in China. I mean, it's not really close, but maybe it stays in the range, you know? Maybe it stays in the range, doesn't actually keep moving. If it was going to move, it would break out of this. Probably look like Ford. If investors thought that NIO was going to take over Tesla in China, then it would already have broken out and probably would be back to its high and look like Ford. So at this point, there's not a belief. And so people probably have the view I have that's like, I have no idea, but it's not something that I could buy because I don't know. And there's nothing here that tells us that, for instance, in a technical way, that this is going to make a breakout or something because it's on a new trend and none of these things are really connected. Like what is this? We return to the price from April. Okay, that doesn't help me with anything. So and I think there's a question that needs to be answered here, and again, I don't think anyone is really prepared to answer the Tesla question because we have a veil over what this is and what it's not, and maybe this question needs to be answered first before we understand anything about what's supposed to happen because I don't think this is a question of will Tesla be what we think Tesla's going to be in the future. I think it's a question of can I make money on this? Is it better than the other things? And the only way this keeps going up is because everyone buys it. It's too fucking big for its own. That's literally its problem is that it's too big. It takes a lot of money now, and it's literally so far from the other mega caps in terms of what it does. The other mega caps, the big five, fucking make money and have hundreds of billions of dollars of cash on hand every year. Tesla barely breaks even in profit. That's the problem. If Tesla had unlimited fucking spending, then I mean, wouldn't be a problem. But they're not a now company, that's for sure. I think that's what's killing them right now. The Neo chart though is very strange comparatively. Maybe because they have China backing, but maybe we'll have to really take some time to think about what exactly what exactly is Tesla's role, you know, in everything. What exactly do we think it is? Spoon says kind of tough to go with Chinese tickers. Yeah, it's really tough. There's the potential upside we all understand, but they're all different. Every single one of those tickers look different. The only one that looks good right now is Neo, and again, I think that question's too hard to answer. And then the other problem is again, China is regulating the fuck out of their market. It's pretty hard to bet on private or not. They're private companies. They're public companies, but it's hard to bet on a capitalistic sort of idea with equities and bet on those companies like we do with our companies and bet that they're going to grow and take market cap and they're going to continue to make profit when the country they're in is regulating them, right? And those regulations can be as far as taking over the company, fucking hunting their CEO, doing a lot of things that are just so unpredictable and really do hinder any sort of appreciation. Investors don't like that. We already have a hard enough time trying to navigate our own regulation. Like it's a different beast altogether. So it's just too many things, too many factors, and too many downside risks that if I could trade out of it, it'd be one thing. But it's those problems that happen with China do not come intraday news related. They come by fucking via gap down, right? And I'm not willing to risk my entire cost basis for obviously a lot of upside. If right now there's so many downside factors. Yeah, trade negotiations as well. I mean, I don't know if I agree that there's obviously a lot of trade sort of focused things, but I don't think Biden is really the yeah, I don't think there's anything there. I think he's gonna fucking do whatever. He's so moderate and he's not gonna he's not gonna cause a problem. He's not gonna be tariff man, right? There will be no tariffs. That's not gonna. Uh, I think that alone, with Trump not being president, it alleviates that entire dynamic, which is so fucking relieving, which is also why you'd expect some of these things to do better. But it's also why we see so many things that are on our value side doing so well. Because things like steel, for instance, is a defensive idea. We're gonna build more things. We're spending more money. Of course it goes up. Under Trump, it was the most volatile thing in the world. Value. Right? And it's why we saw things really fucking come down during COVID. Right now, Biden is he doesn't do a goddamn thing, right? He's not going to talk about it, not going to do anything. I can't even understand what he's fucking saying about it anyway. So there's literally not going to be a problem there. It's just what will China do? What will they do next? Who knows? We have plenty of fucking things to make money on here, right? And I think that's why it's comes from us first, and there's just too many good things to buy. Lithium again continues to do very well. So in terms of this commodity making moves as well, it's definitely doing well. Okay, let's do another check through. I think GRWG is probably going to reach that 46 here with what we've seen so far. Still don't know about that. I mean, there's too many things to fucking try to figure out, but what is the timing again on the whole legalization thing? That's like we have so many things that need to get passed through right now that it's hard to imagine all these things are going to happen at once. I don't think that's like the what's up. That's definitely not at the front of the list. So we have a lot of other things. We need to pass all these infrastructure bills and everything first before we do fucking legalization of weed. So, yeah. Again, casinos continue to do well. Caesar getting more bid right now. So obviously we traded it way back through here. I added a new breakout on it. Continue to do well. Again, it's really hard to ignore this sector. So whatever you think about it. It's not very opinionated anymore, though. It's very price related. All right, are we getting, let's see. Bonds are basically back to break even. We saw the yields up, but I didn't mention them because just the Monday start. Europe's basically break even. Really nothing to mention. Let's see. What do we get for? I mean, again, do we need to mention these things still? But commodities keep going up across the board. FYI. My coffee is going to be so fucking expensive. Well, all of our coffee. You know, it'd be really, you know, what's a really sad thing to think about is that there's commodity traders out there right now trading, or excuse me, currency traders out there right now trading currencies. You know how dumb that is right now? There's literally nothing to do. What are you gonna do? You have two options. Is this gonna go up or is this gonna go down? And you know what it keeps doing? Doesn't do anything. There's you know how long it's gonna take for this to actually have an answer? It's probably not gonna have one. Probably not. Probably not. Alright. See, real quick. We're a little bit more further downside coming through. But I don't think anything's really going on here. I think we're kind of hanging out to start. Still waiting for some action to pick up on the overall. I think again, mostly generated through mega caps and what's going on here. Apple is turning around soon. We're probably going to see this in the average here pretty soon. But let's jump over and find some great trading view ideas because it is one of my favorite things to do now. Okay, let's see. Bitcoin consolidation while alts have their moment. Okay, they all look the exact same, so I'm not going to read that. Did you know about the US dollar index, the DXY? Yes, I do. All right, what's this? Zigzag circle strategy. All right, we're going to learn something new. What are we looking at? This is a zigzag circle strategy. This thing? So they're doing a zigzag lines, which basically, if you don't know, a zigzag just takes the low and the high and draws a line between the low and the high and acts like those are pivot points, which is hindsight generated, right? Completely. So hindsight generated, low, high, but you can apparently then use it for future. So let's think about it like that. Pivot points. But these are zigzag circles. Let's see. Let's see what a zigzag circle is. I'm curious. These are interesting. Oh no, he's using it on like a 30-minute time frame though, with a 14 range. So 14 times 30 is more than a session. So we have to use it on currencies. Okay. When there's a bullish signal, a limit entry is placed on the nearest from 0 to 800 X, which I guess, again, you would have to use things like currencies. So wait, well, what's the number again? How is this number being generated? What? What is this? What? Okay, we have a high and we draw. Are these the exact same curved lines every time? I guess so. So why not just draw a straight line? It's a resistance line with extra steps. Why not just draw a straight line? Why is this curve bigger? This one looks cool. This is a problem you might encounter with zigzag circles. Signals point both directions. Oh, it's back tested too. Oh no. Conclusions, okay. Conclusions. 37 trades were open since the beginning of April, out of which 44% were profitable, with an accumulated profit of 1141 ticks. When backtesting, I like to subtract 3 pips from every trade to give it a better feel of the real world. You make mistakes, and you also pay spreads and fees. Okay, yeah. Why don't you get that from 37 up to about 250? We'll take a look. But it looks kind of silly, so I'm gonna tell you what, zigzag circles. We're gonna ignore zigzag circles from now on. I think we'll look at the low and the high and draw a line on it, like we usually do. But interesting idea, interesting. Too old to be young and too young to be old. Thank you. Perfect. I believe you. Stock ideas. Here we go. AMC, $216 reasonable on Monday. AMC, $216. $216 reasonable on Monday. Now this is the kind of DD I want. $216 reasonable on Monday. Reasonable, he says. Reasonable. 216 is about 300% gain today. That's pretty reasonable, I would say. Yeah. Reasonable. Yeah. Reasonable. Just going to triple in value today. What? Wait, how? How? Oh no. What the fuck? This guy's fucking out of his mind. There's room for a move from 45 to 216 in one day. Not that it will, but that's the reasonable, in quotations, limit. In one day? Holy. I will sell that guy any calls he wants. Any calls he wants. Fucking just hit me up, dude. Hit me up anytime. Overexposed photo of a dress. Hit me up. Alright, let's see. Maybe someone knows something. I don't think Tesla goes up very much either. Tell me. Uh-oh, okay. We got fib lines on a... Oh no, we got Elliott waves. Okay. I like the channel though. Channel looks pretty good, except it's in the middle of nowhere. Put the channel right there. So what are we looking at? This is where C is going to be. He says 390 by July 26th. Guys, you can't use Elliott waves to predict the future. That's not the point. Elliott waves are for analyzing the past, not for predicting the future. That's the exact opposite of what they're for. It's supposed to understand how trends work, develop, how price consolidates, and you're analyzing. Just like Fibonacci lines and everything else. It's analyzing what has happened and understanding an average. Understanding what happens on an average. So that in the future, you can look back and say, okay, this is how it moved in the past. It moved between these points in a certain amount of time over a certain amount of, in hindsight using percent, but it's mostly points based. This is how much it moved. And then in the future, you're not predicting it. You're, again, analyzing once it's happened. And you go, has this been moving based on its average, or is it moving more? Is it out of this move? Is it going to put more? They're not really questions that come up. US 100 Nasdaq breakout trade. What are these candles? In my opinion, good explosive for bulls. I like it, dude. Keep it up. Okay, we have two. We have sensible bull trading and fly down with opposite opinions. Sensible bull thinks gold might drop again if the bulls fill 1895. Fly down thinks gold smells like money. We like dibs. Let's see. But if you want to have a strong opinion, you should remove the might. Everybody knows if you have a thesis, be strong. Don't do this. No might. Only yes. Gold drops again if the bulls don't take the price above this level. He didn't tell me anything. What about this guy? I like the color. Okay, we have a support and a resistance line. I'm not sure where these... Guess he's mentioning how much more volume is. What's this? His price target 1960. Why? Okay. Okay. What we got for today? Cool. In the meantime, we are down 25 basis points. If you thought this was a lot of points, let me tell you, 25 basis points is not much. You ever use Elliott waves and Bollinger Bands? And David says DQ is getting volume. DQ has been cute. No, I do not use Elliott waves. Again, is a form of analysis. Bollinger Bands, I do use technical sort of analysis when I'm... How do we put this? I've done it in the past. I showed you guys, and I was doing some studies to see how exactly effective is it to look at things on the average. Bollinger Band's a little bit better. It's the thing to remember about these things. So Elliott waves is, again, just a form of analysis to basically look at highs and lows over a period of time which you choose. And so you can't use it to trade. That's the problem. Bollinger Bands. What are you doing if you're using Bollinger Bands to trade, right? It's one thing to do analysis, and you look at how price, again, if we just kind of load this up right now. What are we looking at here? We're basically just looking at moving averages, right? If you use this to trade, the only reason you're buying things is because of an average. You don't need to look at the moving average if you can look at the candles. When price crosses a moving average, or if price reaches a moving average, price does not stop. Using these to trade is, again, the wrong way of going about things, because you are trading in the past. You're using an average, which is taking into consideration candles, usually up to 10 periods before. The problem with doing that is you're making a decision on 10 days ago and not on right now, which is why I talk about trading on the margin, which is you're trading on every other tick, right? Every tick that comes through, you make a decision. Why do we buy on support? Because it reaches the support at that moment. You know how long it would take for it to reach the moving averages, right? And so Bollinger Bands is a similar idea of what we talk about, which is trading in a range. When things reach a lower end of the range, we buy it. and then we traded up to the upper end of the range. That's what Bollinger Bands does, but Bollinger Bands instead are lagged. Instead of doing trading in a range in the moment, you're trading on something in the past. So you're always behind. When we trade, what we're utilizing is the fact that we have the ability to get in and out of positions quicker than the market, technically, right? By using Bollinger Bands instead, or using moving averages or any other system that uses an average of candles that's from before, you are trading slower and you're losing points all the time. And you're making, again, a decision on things that happened before and not what's to come. And you cannot use them to predict the future. You can't use them to do anything, right? Because price doesn't stop. Price does not stop. And the one thing to also remember, if everybody used it to trade, let's say everyone used RSI or used CCI or used Bollinger Bands to trade, okay, well then it would make sense to always use them to trade. Who uses these to trade? Nobody. You use it as an analysis. You go, okay, here's how a trend has formed. Are we in a larger spread or a tighter spread than usual? Well, over here was pretty tight, right? Over here was pretty wide. I wonder if there's anything going on. It's a form of volatility, is it not? So you understand when volatility is higher, lower. That's a form of analysis, not a form of trading, right? It's important to always look at things through the lens of trading. This is an easy way to get caught out of that. And that's where, like, this idea of for very new traders and for like amateurs, right? You look for shortcuts. The reality is there are no shortcuts, and so you try to look at these things and go, well, this is going to tell me exactly when I should buy things. That's so far from the truth, right? Sometimes it'll work. And the biggest thing is that people will backtest things. Backtesting is an imperfect way of basically telling you that you're wrong and that it doesn't work. But it's really easy to find correlation when there is none. And so you backtest things. But when you're backtesting, you're basically setting up the experiment to prove your point. No one's unbiased in that regard. Every time I've ever backtested something, it's to prove my point. And then I go, see, it works. Guess what? As soon as you use it, it doesn't work like that because it's you're influencing the experiment. The only way an experiment works is if you do it in fucking real time. Guess what? We've all learned the hard way trading in real time because it's the only way to actually make strategies work. That's how I've perfected my strategy of using technicals in the way that, sort of I do with looking for support resistances, looking at trend lines in a dynamic way, understanding that's based off of trading behavior, how we all think together, because that's all we have, right? It's price. That's it, right? So it's really, not it's not applicable in a trading way, which I think is the most important way to look at things. So, yeah. He said BIIB halted, pending news on Alzheimer's decision from FDA. That chart has been interesting. We've looked at it quite a bit in the past. Again, bios have been a lot of fun. I'm surprised that that's what's happening over here. I don't think anything's going to happen, so I wouldn't be touching it. In like regards to the news. Again, remove news trading from your repertoires. Which way is it going to go? Is it good or bad or bad news? Well, it would be good news, so it must go up, right? That's an easy way to not get it right. Now, this is probably, I mean, obviously, I've already said it's going to go up, but in terms of where we are, this is such a small amount of points. It's really weird to think about that. This is like, this chart is actually very hard to look at. Holy mackerel. Now that I'm thinking about it, this candle right here is 5%, by the way. I'm not actually sure what's happening in here. This range is pretty locked in, so it would need to get out of this range, and then we'll see what happens in there. Very interesting, though. Yeah, no, I agree. Good news on Alzheimer's would be fucking amazing. And also, that's hopefully where we talked about this morning of some of this government-funded sort of R&D, which obviously they already do, but we obviously We need to do a little bit better on some things. How have we not cured, some of these some of these health problems that have been around for forever, right? They don't get as much attention as other things, right? How are we only spending we spend like what? How much is it? Like 2 billion a year on like cancer research or something. I mean, it's more than that, but we barely spend money on some of these things, and then we'll go and spend money on dumb shit, right? Like, imagine if we were able to fix some of these problems, and it's not like we can't, as if we can't do it. Right? Bios are altogether continuing to move, so. Oh, actually, since we were just having that discussion, let's take a look. Is is the S&P overbought right now? No. On the RSI, it's definitely not. So right now, all these RSI traders are going, you know what? It's pretty good right now still. Keep buying. Not bad. What about the NASDAQ? No. What about the dirty Dow? No. What about energy? Got pretty close to being overbought. What about banks? Must be. Nope. We were back here though. See how RSI didn't help? Now, what if, ready? You ready? Okay, RSI is not overbought. What if you're a 5-minute candle trader? It was overbought just on Friday. It was overbought on Friday morning. It was overbought on Friday morning. It was overbought here. Overbought here. It was underbought down here. What is it? Is it overbought? Is it underbought? What the fuck is it? What is it? Or oversold? Right now, it's oversold. Right now, you should be buying. Well, duh. It looks like just like the candles, does it not? Is this not this? Or is this literally not the candles what we're looking at right now? If I turn this into a line, are these not the same thing? Those look identical to me. You know why? Because this is just a fucking line chart of this chart. Good job. And all it does is take an average of the last 10 bars. So you can't use it on intraday candles. But people swear by their RSI 5-minute trades. If it goes over, buy it. If it goes under, sell it. So funny how some of these REITs work. So defensive yet so volatile when they break out. Let's see. For break even, BAP started with a gap down, obviously. Hasn't been anything to do here. Anything else is break even. Weekend. Interesting start to some of the cards. Sells continuing. What do we have on sort of the active trading on this right now? Okay. Who does it look like? Looks like retail. there anything different about this week's trading so far? Not really. So looks like the game is still being played. Moderna is catching more bids. So if you didn't know, there's a lot of points being put on in this sector. Bios are getting a lot of attention. You didn't know. And it's very much oriented to those new companies. Where are we at on BRKB right now? Still trading in this range. Very upside heavy. Just chilling on the trend line still. Okay. Not much on the downside to talk about. Obviously DQ trading the range. David mentioned the volume hanging out. Not much to see there. Uh, there's not much on the sell side. Not much on the sell side. Most things from our tickers are take profits from Big Friday numbers, which has been actually the story of most red days, or at least on tickers that see a red day as a take profit from a Big Friday, or at least a take profit from the day before. When obviously we had a very nice buy. If you weren't here for earlier, bought this right here. Pretty straightforward buy. Like I said then. Again, I mean, you have to take advantage of the moments that you have, and when every other ticker's on on this sector of casinos and then travel is going up, it doesn't really make much sense not to buy this here. And like I say, the best time to enter is yesterday, and I'm not buying it fucking open. The day after a pullback candle. The usual consensus is a red daily candle pulling into support, and the next day buy on the open. That has not been the case for 6 months, and that's why we've been trading differently. We've been buying the day it happens. The day it happens, we're buying. And we're not going, well, what if it sits here for an hour? What if it breaks down? I'll answer that question when that happens. Otherwise, you know what I like? You know what I said for a comment when I bought this morning? I'm going to grow another arm and it's going to have a bag on it. There you go. Again, you don't have to, in these sort of things, you don't have to ask a different question than what it is. It's a price question. Is price going to bounce on support? Well, there's a fucking support there, and I drew the line there. That's it. It's either going to happen or it's not. If it didn't happen, then okay, well, it happens more often than not. And now it's break even on the day, but that's not the story here. The story is it's a 1.5%, so now I have a baseline to go from here. I don't care about this. I don't care about the gain here. What I care about is that I now have a baseline. I'm not going to get fucked on this trade anymore, right? I've gained quite a bit of points. What am I looking for? I'm looking for the potential here of trading this to the upside. Just to the high alone is 10%. That's 10% from here just up to where we were last week. Is that what I'm trading for? That's not even what I'm trading for. I'm trading for the actual upside. Right? I'm trading for the open range. And I have to take the trade every time it comes into the low end of the range for that upside. Because I can hold this for 2 weeks, and if it goes up there, that's going to be enough to go and spend fucking 6 months at the win, right? For doing what we do, buy a pullback. This may not be the trade, but it's at least a swing trade, right? That, and again, we have to make a lot of those trades. It takes a lot of those trades. It takes a lot of those trades. And in a time period where the market's trading very slowly, we're very value oriented, right? We're very long term. It's going to take many months to build up actual gains. When we have risk that we can put on, we want to be taking those risks, right? And especially when it's in an area, again, a sector that we like, and uh, we can utilize the tools that we have, right? It's important again to get those trades when we can, and again, all it is looking. That's it. Is being aware, having the awareness that that's an opportunity, and that's it. You can't take an opportunity if you don't fucking see it. That's it, right? Are there other opportunities out there? Yes, yeah. We've missed hundreds of trades today. Absolutely, because I'm not looking at everything. I'm only looking at what I'm looking at. I think we've caught enough. And it's just one of many of examples, but there's been plenty of trades, but all the ones that matter. Opinions on some things. In terms of today, we're sort of just rolling over. I mean, I think you get a melt up lunch. I don't. Again, I think when we talk about this intraday start, it's not going to be indicative of the day, most likely. We'll see what it looks like at the end of close, right? We'll see what the move looks like. Again, what matters overall is not what happens intraday or day to day. It's really week to week. And so if we continue, but we are curious and interested about how this trades around the all-time high. So this morning we got rejected at all-time high. And we haven't really pulled back much is the story. We've only pulled back 20 basis points, which is fucking nothing. And we're probably going to see that, but we do want to see it. That's going to be the case. Apple still has stayed at the low. The other more bullish mega caps have continued to put points on, which again is the this is the part where you go, okay, this is just going to keep fucking going up. So again, understand what's happening with the average right now. It's a little lagged. I think it's really easy to say that these are going to continue to go up and push the average. You're just waiting for everything to catch up. Why is it taking a slow time? Because we're trading slow right now. We're trading slow. You look at this chart. Is energy being bought? Yes. Is it break even? Yeah, it's break even. It's taking some time. Why? Because you don't put this order on all at once. You continue to put the order on. And intraday moves can look at what happened on Friday, right? The way we came down, sold quite a bit, and then by the end of close we were up, right? So again, these things are, the story is much more what was open and close, not what happened at lunch and what happened at like the 30 minutes after open, an hour after open. These things are not they're not deterministic of what happens, which is why we can't use those other tools, because they don't determine what's going to happen. What's going to happen is already in place. Those orders are going to happen. They're going to continue to come through. Like the trowel sort of dynamic. Hard to, I don't know. It's hard to see anything breaking trends right now. I just don't see it. Very nice candle from MPLN. I like some of these cheaper ones right now. There. Lead right now. Chart is silly, but Again, another nice time to take the lumber trade for a swing. The way in which, again, these work, it's lagged between the future. You're going to remember that. And I talked about this on Friday. We talked about taking the same trade again. Now, it's trading in basically the exact same way in how we took the trade before, right? It's really important to understand the dynamic between the two, right? 10 o'clock, you start to get the lumber futures. If it's ticking down, you're going to understand that that's taking profit on the equity side. It depends, again, where you entered. You only want to enter if it's going towards the upside, which, again, we use Friday as a baseline. It was going to the upside. It's at a low. You go and look at the lumber futures, obviously, you're at a low here. What's going to happen? You're going to pivot to the upside, right? Pivot to the upside. Now, these are swing trades. This is not, you're going to go bet that things are going to be up in 2 weeks from now. But I think these are easy, consistent trades, very much like how you can take the gold trade. Again, I talked about using the equity market to trade this. It's pretty straightforward. As long as gold's up before the open of the equity market, then the gold on the equity market will tick up, right? That's it. You take the trade. For instance, I talked about JNUG with the gap down here. It's very easy to go buy it there. These things are not, again, this is not like some complex math problem to go trade these things when the leveraged market is going to overreact to situations, which you can then utilize to take the upside trade every time, right? And that's why these sort of lows are, it's important to realize that it's not a loss of value. Again, it's a reaction. And you trade after the reaction and you use it again on the 1 hour candle. That first 1 hour is all you need. That as long as you're ticking up, you will tick up. Again, very easy to find the candles when you're supposed to be buying. The movement is very easy to find. Same thing on all the commodities when we trade things. Go look at, again, things like on lithium. It's really not, it's not a mystery, right? Not a mystery. This chart's a mystery, though. Definitely retail. We've answered that question. Definitely retail. Also, Jeff Bezos and his brother are flying in July to space with one extra person, whoever bids the most. I think that's pretty fucking cool. I'm surprised to hear that the richest man in the world is willing to launch himself in a fucking rocket. On the top of a rocket into space. Richest man in the world. He don't give a fuck. Jeff Bezos, we talked about it, is definitely the bad boy of the bunch. Easily. Dude's willing to strap himself onto a fucking rocket and it's gonna land. He literally doesn't give a fuck. Does not care. That bald chrome dome gonna be getting fresh sunlight in space. This is pretty cool. I mean, they're doing it very soon, which is interesting. Next month. That will be quite the event. Because I'm pretty sure Elon Musk would never launch himself in a fucking rocket. I'm pretty sure that's a guarantee. Never gonna launch himself in a rocket. Even though they have the best success rate ever. The Mead mentions LLY. Yes. That happened. That happened. Pharmaceuticals. Big day. Big day. First of all, when is Moderna gonna have a red day? That's the real question. You would expect it would have to come after this day. You would have to imagine. Doesn't need to. I bet this is, here you go. You want some real RSI analysis? I bet this is disgusting to look at. There you go. RSI people are losing their mind right now. Everyone's shorting it. They're going, oh, short it. Short it. Well, good luck with that. All of them, literally all of them. Every single bio that we've put a chart on has really had the dime. Really had the dime. It's important to again understand that those, at least that sector, has gotten retail influence, and it's very specific to derivatives. It's really important to understand again the option side of this. A lot of these are fueled by options activity more than anything else, and that's very timely, right? Yeah, winning is now green on the day. Nice start, and I think overall it's a nice spot for travel. Again, if you're in a position like I'm in the AAL position still, if you're in a position that you would buy right now, then keep holding it. Buy more if you can. I don't think anyone really has any money though. I don't. PRTA, all the bios, dude, all of them. AVXL, all of them. Beautiful. PNGO has obviously been at the top of the list, but we haven't really some of these. Don't think there's much else to see here. Mega caps again will be the dictators of. You can see how so many charts are bid right now, but it's not pushing the average up because they're literally fucking tiny. So mega caps we're still waiting on. I think what you're gonna see is energy and banks will go bid and probably push this average up a little bit better. I think the Dow probably leads again out of the low here. You're probably gonna watch this go bid pretty quick. Small caps have obviously led a little bit on the day. That's regional bank focused. Banks will come through. Mega caps really waiting on Amazon and Apple to put points through. I don't think those are questions. Those are sort of innate in price right now towards the upside. These retail tickers keep going. Obviously, we need to be aware that there is a point. There is going to be a point that they can't put more on. Right now is not it. We've seen that it's very possible that the trend can continue for another week, 2 weeks. That does not mean we should trade it like that, but we can trade it, day trade it, whatever we want to do. We are looking again for other tech companies that are not mega caps, but large, big names to actually show continued bid. We've seen it. They're coming, right? We're seeing it. It's looking better for growth, right? I think the net chart I've used as an example a lot of. This is one that swings back and forth. Is this time different? Is it going to continue to go bid through here? Is it going to trade in this range again? Same with Netflix. Netflix trades in the same range, but it's at a low, looking for it to come out. It's going to take days to answer. Right? See it continue, but a very strong day to start this week, even though the average doesn't say so. You're at all-time high holding. That's all that matters for your bullish story. Otherwise, there's been a lot of places to continue to make money. The only thing you can do right now is be in. If you're not in, you're losing money. That's it. Capture day to day. You don't have to do much in terms of, orienting your portfolio right now. It's really just about being in the overall market. We've seen sectors, again, like outside of value, I'm talking, there's not really something you have to do in terms of risk. You take the risk that's there, the opportunities that are involved, and you don't have FOMO. You don't try to go catch something that you missed because there's always something else. I think we're proving that over and over again. And so things look pretty damn good. I love the bio moves today, and sort of the taking a big idea focus. And I think again, it has to be, the question has to be begged. Why are these companies all catching bid together? with Moderna sort of leading that charge a little bit here with why is a COVID vaccine company made a COVID vaccine, has no other relation, why is it catching more bid than it did before? And trending. It's not just one day, trending over weeks of time, months of time. There's got to be something there, and we're seeing it across an entire market. So it's not just a dick. It's not just a dick around, right? So I think again, seeing it this week. I talked about it. I said last week we're going to talk about it again. There you go. All right, and so let's take a break for lunch. Nice day so far. Can't wait for the rest of the week. Again, big sort of Thursday. So just remember, most of your shit's gonna get out of the way like now, and then we're gonna probably wait until Thursday. So kind of take advantage while you can. We're probably gonna transition a few days from now, like before Thursday, on some things before that happens, because again, I don't think the market really has made its mind up on whether it likes high, fucking higher or lower CPI numbers. We'll talk about it as we get closer. But I'll see you guys this afternoon. Enjoy your lunch, drink some water, get some exercise, do something, or don't. Doesn't matter to me. But I'll see you then. Enjoy.